This is an introductory video on farm accounts. We're going to look at a ordinary level farm account question first, in order to see how the process works. So farm accounts is quite similar in layout to club accounts and service farm accounts. At the top of the question here, it says the following assets and liabilities of the Maloney family farm who carry on a mixed farming enterprise or business on the 1st of January. Here are their assets. They have land, um, farm buildings, machinery. They have 36,000 euros worth of sheep and 109,000 euros worth of cattle. Those are opening stocks. They've got some cash in hand, which is the opening balance of this bank account if it was recorded there. They've got electricity due, which of course will be an expense due, a liability at the start of the year, and wages due are a liability at the start of the year. And part A of the question asks you to calculate the Maloney family capital at the 1st of January 2012. That is very similar to an accumulated fund for a club account. It's all of this information at the top. Then, just like a club account, you will have some money in and some money out in a receipts and payments account. So here's the money in, selling of wool, lambs, milk, a single farm payment, which may be related to cattle or sheep, and the sale of cattle. And then on the credit side, you have purchase of stock, sheep and cattle. You have 4 general expenses then that can be related to either sheep or cattle. That is fertilizer, electricity, wages, and repairs. And then the workings at the end of the question, well, you have your closing stocks of cattle and sheep. It tells you the single farm payment is to be, it's like an annual grant, it is to be divided between the two enterprises in the following ratio: 80% cattle, 20% sheep. It then talks about the 4 expenses that I just highlighted here. These 4 expenses, it says that they are to be divided equally between the two enterprises: 50% cattle, 50% sheep. Here, this is drawings, lamb used by the family during the year, so they kill some of their own lamb and consume it, and milk used by the family for their own during the year. Those are both drawings. And then we have electricity due as well, which of course is an expense due at the end of the year, will need to be added on to the electricity working. So the first task we have to do is, just like in club accounts or in service firm accounts, anything which needs our attention in the top sentence or indeed in the end of question adjustments needs to be done first in the workings. Then we'll piece together the question afterwards. I should have said at this point, what have you been asked to do in part B? You've been asked to do an enterprise analysis account for cattle and then separately an enterprise analysis account for sheep. So you have to do, it's basically an income and expenditure account for each section of that farm, the cattle and the sheep, and you do that separately. So let's look at some of the workings. Well, the first working is unique to farm accounts, where we are going to look at whether the cattle and sheep stocks increased or decreased. Normally speaking, they will increase. It's quite unusual in this question that they're going to decrease. So you have a 109,000 euros worth of cattle. That's your opening stock. And then here is your closing stock of 73,000. Now, normally speaking, that will be an increase because you will have more cattle born than died on a farm in a particular year, and therefore that will be a natural increase in stock. In this case, a natural increase in stock will be an income. In this case, it is a natural decrease of 36,000, so therefore it's an expense. And likewise, for some reason, the sheep stocks have decreased from 36 down to 29, which again is a decrease. If it's a decrease, those items are expenses. The second working I'm going to refer to is the single farm payment. That, of course, is referring to this here, that this 80-20 split. So we're simply going to take our single farm payment of 13,200 and we're going to split that in 80% cattle and 20% sheep. I'm using color coded here, so the yellow numbers are going to be cattle and the green numbers are going to be sheep. Then the next working that I'm going to refer to is this one here, and it says in working 3, fertilizer, electricity, repairs, and wages are to be divided equally between the two enterprises. So we're going to take these 4 numbers Now we must get the final number, so therefore you do have to factor in if you have any electricity due or any wages due. You have to factor that in first, and then when you do that, you have to split it 50-50. So I've done those four here. Electricity, well, you need to take out the electricity due at the start, add on the electricity due at the end. Same rules apply, which would have always applied in club accounts. That gives you the 13,100, and that is the number that you can split 50-50. Wages, 22,900. You take away the amount which was due at the start of the year, it should have been for last year, add on the amount due at the end of the year. When you get that 22,300, you split it 50-50. And then fertilizer and repairs did not need to be adjusted, just needed to be split 50-50 in each case. Let's just go back and check if there's anything else that needs our attention. Well, in the top sentence, the rest of it is just assets. We've done our change from opening to closing stock, our decrease in stock. We've done these two amounts due. And down here, we've done our closing stocks, we've done the single farm payment, we've completed this splitting of those four expenses, we've done electricity due. The drawings of lamb and milk I'll speak about when we get to the answer, but those are essentially extra sales, so we're going to include them as incomes. I'll explain that when we get to it. So that's all of the workings completed, and therefore it's safe for us to have a look at the question. Now, the first part of this question is simply the opening capital. This is like an accumulated fund or like opening reserves. At the start of the year, you put in all of the assets from the top sentence. So this farmer had land of 400,000, buildings of 150,000, machinery worth 73,200, and then they owned sheep and cattle and they had some cash. Liabilities at the start of the year only. Electricity due of 700, wages due of 600, the total is 1300, and you take this away from this and you get your opening capital, which is 784,700. That is how much the farm was worth on the first day of January. Now, then side by side down here, I'm going to show you how to do the enterprise analysis accounts. And this is really very straightforward. It is an income and an expenditure account. But we are splitting this, that we are only putting in here things which are relevant to cattle, and then we're going to put in here all the things which are relevant to sheep. So therefore we put in the sale of milk, 86,000. That's from the debit side of the bank account directly in. If there was amounts due or prepaid, you would factor it in, but not in this case. You put in your sale of cattle, which is 47,900 directly from the debit side. You put in the 80% of the single farm payment, because that's how much we've allocated to cattle, and you put in the drawings of milk here. Now, why is that an income? Well, because the family have taken that out for their own use. But of course, if they didn't take it out of the milk tank for their own use, it would have been there to be counted amongst the sales. So it is essentially them selling it to their own family. So we count it as a sale, totaling up to 146,360. Here are the expenses. You have your purchase of cattle. Now, in this case, you have a decrease of stock, which is an expense. Normally speaking, that would be an income, an increase, but here it is a decrease. And then you have the 50% of each of these expenses also, giving you a total of 100,600, which when you take the incomes away from the expenses, we can see that the cattle yield a profit of 45,760 on this particular farm. You do the exact same thing for sheep. Here's the sale of wool. Here's the sale of lambs, both directly from the question. The 20% of the single farm payment from the workings, and the drawings, because if they didn't consume that lamb themselves, they would have sold it to the factory or the butcher. Instead, they sold it to themselves. And then you have your purchase of sheep. You have a decrease of stock this year, and again you have these 50% numbers, giving you a total here of 41,400, which you subtract from here, and you see your profit on sheep here. Now, at a glance, we can see that the cattle is a much more profitable enterprise than the sheep, several times more profitable. So that it's almost like departmental accounts. It gives you that insight into which is most profitable. When we get to the higher level questions, you'll be able to We'll be doing a part C, which will be a general profit and loss, where we combine both of those individual enterprises into the incomes of the overall farm. And you will also have overall expenses to take away. But we'll look at that in the next video.